Hey everyone, just jumping in before we press go on this recording. It was recorded live here at our studio opening party in Newcastle, and I don't know if the format that I thought I would try worked as well. So if you are a new listener, I would run for the hills. If you want to look at other episodes, knock yourself out, but this one might not be amazing. It's more for our community, and just I wanted to record a live episode here. I do feature a handful of financial advisors answering questions to case studies, and the full depth analysis of their respective responses to the case studies. We'll put a link below to the YouTube so you can have a more of a deep dive into each person's flavour. And at the end of the episode, in the after party, you'll see the official opening where we cut the ribbon and all that. But ultimately, this was a bit of fun, and you've been warned, okay? It's not content of the year, but you'll be the judge of that. So thanks so much for watching, and thank you for your support this year.
Well, John Pigeon, welcome Newcastle. We are at our live studio opening launch party. We're doing a live show. Now, it's a big operation now. If you are watching this on YouTube, you'll see we've got multiple cameras set up. It's a big pain in the ass now that we're a YouTube show.
Feels like I'm in Walt Disney, to be honest. The cameras are making me sweat. It's like it was only 38 degrees here today.
That's right. And thank you to everyone who's come out to celebrate the opening of the studio. And yeah, thanks so much. We've got family, friends. It is like a funeral. Just don't know who's going to show up, but they're all kind of connected to something.
Hopefully it's not the last time they see you.
Well, it might be.
Who knows?
Who knows? You know, every day you wake up and it could be the last day, John.
It's a bonus.
So live it. So drive life like the wheels are falling off it or whatever. Okay, so what we're going to do this episode, wanted to make it fun, wanted to make it interactive. Last week, I did a case study. I made a case study up. And what I did, I sent it to a few financial advisors and property gurus, mortgage brokers, and they're going to come, I'm going to read the case study. They're each going to come up and tell us, you'll get 5 minutes each or less, what they would do in the case study. And then also, there's a link in the show notes, and we'll put it over the screen, the details of the case study. And they're going to say what they would do, but in the show notes or the description of the podcast, there'll be a link to each respective person's, if they want to do it, full detailed analysis of this case study. So Sam and Olivia, they're in Brisbane. 36-year-old Sam, 33-year-old Olivia. Sam is in sales, earns $170,000 a year plus super. He sells coffee machines. So great business, the coffee machine business. Olivia works part-time in admin, $46K a year, 3 days a week. They've got 2 kids, aged 5 and 2. Next year, Olivia may add 1 more day as Sam's parents are retiring in Feb and are happy to help out. The home is worth $950K. It's a 3-bed, 1.5 bath brick veneer outside of Brisbane. The block is 800 square metres. They don't mind their location. They may outgrow it. The mortgage is $610,000, a variable rate at 5.97. They've got a couple of accounts for everyday expenses, $18,500 cash, $2,000 in an account for kids. Super balances, Sam, $92,000 with ART high growth, default insurance. Olivia, $48,000 with Aware Super, conservative, fixed amount of $500K death DPD. They got $4,500 in raise in Olivia's name. They got $4,000 on a credit card. They're paying 18% interest. They're trying to pay that off. Don't know why you would have that credit card with that income, but we're here now. The car loan of $22K. They got a Mazda. It's valued at $32K. Sam has a work car. The goals and comments in the initial form they completed. I'm just going to walk over here because there'll be a thing over the screen with this. There's a $200K inheritance potentially from Olivia's nan within the next 12 to 18 months. They want to pay off the home faster. They want to refi to pay off the car loan, maybe. They want to keep adding to the raise account. Olivia is concerned that her super is growing too slow. This is so boring for a Friday night, but whatever, we're here now. Olivia is concerned her super is growing too slow and might be eaten by fees. They want to decide whether to invest the inheritance into shares or property. They want to build a long-term strategy for school costs. They heard about buying a self-managed super fund to buy a property. They're interested in that. They want to get organised and feel financially in control, and they're feeling a little bit stressed. And I asked the advisors that would come up here and the mortgage brokers and John, what questions would you ask them? What assumptions have you made? What is your strategy? And how did they benefit from your advice? Who wants to go first? Rach Kroon. You want to go first? Okay. So I've also, and don't worry, Vince, you're coming up later in the second part, so don't drink too much.
Did someone send this through to you, or do you make this up?
I made it up. Oh, okay. Hang on one
Good
sec.
makeup.
Did you need a bigger font?
All right. And 5 minutes starts now, because we've got like 3 or 4 people to get through. So
All right, we'll be quick.
let's go.
Righto. So are we paying P&I on the mortgage? Doesn't say, but let's assume you are.
Yeah,
Yep. It's 5.97. Is that a good rate? It's not bad.
it's all right.
The 18.5 grand, that's a buffer, I presume. Don't know how much we're saving per year, do we? No, there's no savings plan there, but let's assume they are saving. Are they good with money? Don't know. I want to say high level. They're living in Australia. They've got a home. They're better than majority of the world. Yep. So they don't need to worry about a thing. There's our 5 minutes. No, but if we get back into the weeds of it, they're 36 and 33, so let's call it 30 years to retire. Private schools, so they need to stay cash heavy. We don't know their borrowing capacity. We don't know their risk profile. We don't know if they're a spender or a saver. So we really don't know what the hell they're doing. But the 200 grand that they're getting from Olivia's nan. What if she stays healthy? What's that? Well, I don't. Are you accusing me of stealing it from the nan? Huh?
Is this a train wreck?
No, look, I'm trying to... Well, you give us heaps of prep for this stuff, but like...
I emailed it yesterday.
Oh, shit, I didn't get it till today, did you? Do you want to talk?
Sure.
No, but just before you do, the 200K, like we've got a car loan of 22 grand. Do we need to get rid of that? We probably do. I don't like putting it into house debt, but yeah, we need to get rid of it. I'd just try and tell them to have a good savings plan and get rid of that. The 4.2 credit card debt's got to go. 18%'s nasty, so we've got to get rid of that straight away. I wouldn't put that into the home loan either because I wouldn't do it, but some people would. They're going to have a mortgage of about 410, so they're going to be fine.
They are going to be fine. Look, we're not financial advisors. We're mortgage brokers, so we tend not to give advice. And so the people who are going to give advice will probably come and talk about their strategies. But what we would do would be give scenarios. So I think before you go to a financial planner, or before these people can go to a financial planner and get advice, they need to know what they can do, because that's probably what the most important thing is. But high level, you'd go, well, you're not going to have a credit card with 18% interest when you've got $20,000 in savings. Like, there's some pretty easy wins here that you can get rid of. With a car loan, people think they want to roll it in, but really, sometimes you paid all the interest up front. So you can't just roll in credit cards willy-nilly or car loans willy-nilly without knowing if you've already paid the interest up front. So you really have to know how much that's going to cost.
And it's a bad habit too to get into that credit card debt and also the car loan. So, like, do the hard yards and get yourself back out of it.
Yeah, but high level, if people are going to invest in property or upsize, which is really what these people are going to think about doing, it's what's more important to you and can you do the two? So I think what they would do would be, this is what it would look like if you put the 200 off your home loan and did nothing. This is what it would look like if you upsized, and here's what it would look like if you bought an investment property. And then when you go and see somebody that's going to give me, a bit more high level advice, at least you know what you can do. So I think that's what people want to know when they sort of break that down from a mortgage broker's perspective, is give me all the scenarios and tell me what my choices are before I go and make bigger decisions.
Yeah. The question of deciding whether to invest the inheritance into shares or property, please.
I'm going to give a hard no to the super fund though.
Oh, yes, definitely no SMSF. Yeah, we're definitely not going there. Even though I'm pro-property, rarely are we going into that self-managed super fund space. The interest rates are nasty. The higher deposits are not that great. What you can do inside super is restrictive with property, isn't it? So, yeah, I'd be very reluctant to go there, especially when they haven't got an investment property in their own name to begin with. So we could build that out first and then swing around and say, well, okay, do you think you can do a better job of it than the super funds? Don't know about that.
But high level, 610,000 on this income is still a pretty big mortgage. And so your mortgage is obviously big if you're doing things like getting a car loan and pulling up a credit card. So I think maybe that 200,000 high level might be best on their mortgage before they do anything else and reducing that debt.
And debt recycle, back out with equity.
You can always invest later.
Yeah. So how did they benefit from our advice?
I'm just giving scenarios, John.
Yeah, love it.
Remember what I told you on the phone? I'll tell you later. Rach and John have the podcast This Is Property, and they're crushing it. So give them a hand. If you want, you can full on do some scenarios, and we'll put the link in the show notes next week if people want to do that. All right. Next, we might get Jimbo up. James Millard from Sufficient Funds. Give him a hand. Thank you for supporting the something tonight. You helped.
Thank you, Jim. Thank you, Glenn.
So, you got some notes. So, what questions would you ask them? I'll start the timer.
So, 10-minute timer. Thanks,
No, you got
guys. Yeah,
5
10,
minutes.
at least 10.
So I don't know if this is going as well as what I thought in my head.
Is he blaming me?
No, you're crushing it. Time's starting.
All right, so you said what questions would I ask? Well, questions, I think, to start with. I mean, usually we would start with a massive meeting where we really unpack all this stuff. So questions, there's lots and lots. We don't have time for lots of questions today, but I'd be asking, how did the credit card debt come about? Because it gives insight into behaviour. I'd be asking, is there an emergency fund in addition to the cash savings that you've told us you have? Because often that's the case with introductions from Glen's community, is people are already all over this and they call their savings the stuff they've got on top of their emergency fund. So maybe that's free and easy and ready to use. So we're going to make that assumption. How much are you saving each pay? Is it consistent? Because they told us above that they're a little bit worried about the money situation. But Sam's earning 170 grand. Olivia's on 46. She's thinking about going back. They've got decent income and their mortgage isn't huge. They're bringing in 13 grand a month after tax when you put it all together. And their mortgage is maybe about 3 of that. And so there should be a little bit left over. And so there's an opportunity there. I was going to ask about private schooling and ask how flexible it is and just kind of talk through that because it seems like maybe a bit of a stretch goal at the moment for them. Any other big spending in the next 6-12 months? They told us, yes, we're going to go to Fiji and it's going to cost us 10 grand.
So there's an assumption.
There's an assumption there.
Okay.
So
What
there's
other
some questions
assumptions?
followed by assumptions at the same time.
Okay.
Are they considering having more kids? They've got a 5 and a 2-year-old. This is a big one.
Yeah,
right?
There's a few heart attacks in the crowd.
I've got an 8-year-old in the crowd here somewhere.
She's been helping with the gelato.
Serving the gelato up,
Yeah.
So they are unsure is an assumption, right? So then right now they're saying, we don't know if we're going to have kids, another child or not. So make it 3, which would be a big impact on what they do next. And then investment preferences. We're going to discuss all of that. So we're going to ask lots and lots of questions about all this stuff. Assumptions. Firstly, we're going to scope out the inheritance right now. If we're going to build a financial plan right now, you're not wishing grandma away.
Not yet.
So it's nice to think that there might be some money there, but if there is, grandma might have a few strings attached as well.
Old granny strings.
She's going to dictate from the grave potentially. But if it does eventuate, then we'll discuss that at the time with an annual review. Olivia another assumption, she's a long-term investor. She's really comfortable with high risk, but she's sitting in conservative because she hadn't looked at her super fund in a long, long time, and for some reason it ended up there. And so there's some work to do with that one. And we're going to assume the car loan is 3 years old, so only 2 years remain. How's our timer going, guys?
You got 2 minutes, 1.5 minutes now.
All right, so really high level, quick strategy. We're looking at the spending plan. They've already told us they're not sure how much they have left over. They're not really clear on that, and they could probably, in my opinion, be saving more than they are. And so budget, categories, account structure, automation, getting that right for them. They're paid into 2 separate accounts, the note said. So it's looking at, well, is that working for them? Is there a streamlined way that might help them feel that their cash flow is a little bit more equitable between the two for what they're earning? We're going to run 7 years of projections in this strategy. Really detailed, mapping it out. It might be, what if you have another child, what if you don't? Not that the money should ever make that decision, but it's a good...
money helps, am I right?
And then we're looking at what we call the 4 stacks. So the 4 stacks of sufficient funds, it's how we approach it strategically. We're looking at, really simply, debts, savings or cash, investment and super. And in my opinion, they're all relevant in this case. So debts, we're going to kill the credit card. We're not going to kill the car loan. We're not rolling that into the home loan. That's you've probably already paid most of the interest in that. And early termination fees will probably outweigh the benefit of knocking that off any time sooner. The home loan, we're probably going to pay that at the minimum for now. With the possibility of having more kids, they might need to hold on to a bit more cash. Just keep that going at the minimum.
You got 10 seconds.
Oh my God.
He's got notes. So
all right,
I'll get James.
So
okay, wait.
We're going to come back to this.
No, this is good. But in the interests of time, James, can you come into the studio? Because James is in Newcastle.
Yes, I can.
Come in next Monday.
Let's leave that one smoking.
And we'll do you can take an hour to walk people through this strategy because he's put a lot of time into it. And we'll put a link in the show notes. So,
love it. Thank you very much.
So thank you, James. I don't want to kick you off, but we'll be here all night. But
thank you very much.
Thanks for your support this year. Thank you for the help with the gelato.
Well done, buddy.
And give him a hand, everyone. I'll take that mic. Thank you. The rules are set. Scotty or Phil? We'll go Scotty. So Scotty is from Everest Wealth. They've got advisors in every cap city, or they do a lot of remote advice. So thanks for coming over east. I know it's a long way.
No worries. Can I talk? Or?
Oh, no, I'm using your time.
Okay, no.
I'll add 15 seconds to it. All right. What questions would you ask them?
What James said?
Okay, give him a hand.
Done. So yeah, what James said.
Okay,
but to
cool.
add on to that, dive deeper into the schooling. Private schooling can obviously be $5,000. It can be $40,000. So understanding what that looks like, because that will have a massive impact on potentially what we do with the plan around that, and how much of that is a priority versus the home upgrade. I know it wasn't really talked about in the case study, but I'd assume that they'll probably want to do it. We see a lot of clients that get to the point where a 3x1 would just be too small for a 4-person family. And potentially, if that's the priority, do we bring that forward and try and do that sooner to future-proof potential price increases in the future as well? So yeah, a lot of questions around that. And then also with the inheritance, what's the assets comprised of? Is it cash? Is it shares? Is it property? And for this, we're assuming it's cash, and we're assuming that it's not because she's passing away, it's because...
She's a nice nana?
Yeah, she's giving it to Olivia early. So in terms of our strategy, what we would do is really deep dive into the spending and really get the foundations strong. So review their last 12 months of spending, revert that back to them and set a new parameter, and then smash down the credit card with the existing savings, like Rach said, and then set a plan where they have a hub paid into, spending account and a bills account, and just get a lot of structure around that from there. From there, what we would look to do is potentially bring forward the house purchase goals, so work with someone like Rach, for their borrowing capacity. Ideally, if we can, keeping the existing property as an investment, so we wouldn't want to pay that off any quicker, so keeping any money in the offset account for potential future tax deductibility purposes. With the schooling kind of option there, looking at an investment, there's probably 7 years until the first payment would be due, so looking at investing now rather than spending 30 grand in 7 years' time. Maybe they need to invest 10 or 15 grand now, so it's an easier target to achieve.
Awesome. Anything else you want to add? You've got plenty of time.
Thank you. With the super, so they're with Australian Retirement Trust and Aware Super.
The only reason they're with them, because I'm like...
They sponsor you?
They've sponsored the podcast. So for the businesses watching, you spend once, you get more than once benefits.
So what we would look at there, like what James said, the risk profile is an easy one, moving from conservative to high growth. She's got 30 years until she can access this money, so that makes sense. But also just looking, a lot of super funds these days have a cheaper index option. Sam's in the high growth option with ART. There's an index high growth option with them that is significantly cheaper, and super funds charge percentage-based fees on the balance, so that would make a massive impact, potentially tens of hundreds of thousands of dollars savings over the next 30 years.
Yeah.
So we'd look at that as well. Definitely discount the self-managed super fund, just the balances aren't there yet to do that. We would look at kind of an estate plan as well, given they've got young kids, making sure wills are in place, power of attorneys, beneficiaries on their super. And then in terms of her super having concerns about that being not growing very quickly, judging by the case study, I don't know if it was done on purpose, but it looks like her contribution's 18.5%.
It wouldn't. I don't know.
Yeah.
These are what clients tell you.
So
I don't know. It's probably a typo.
Most people, when we map out a 30-year kind of projection of 12% of their salary going into super, they'll have more than enough for retirement in a lot of cases. So it would be giving her that peace of mind, but then also there'd be more benefit for Sam contributing to super because he'd get a bigger tax saving than Olivia. If the concern is that kind of equality, we can always do a super split, which is transferring some of the contributions Sam puts into his super to Olivia's super fund for that equalisation purpose as well.
Yeah, sweet. Do you want your last 15 seconds?
15 seconds. Thank you very much for having me.
No, thanks for coming. Do you want to, maybe we'll see if we can do a Loom remote or something this week and you can full on go to town.
Sounds good.
Yeah, appreciate
I'll be
it.
there.
All right. Thanks, Scott. Appreciate it. Phil, do you want to come down? So so Phil is from Sky Wealth, and Phil is also a good friend of mine, a good colleague. Travelled the world with Phil. Hey, Phil.
You did. Hey, mate. How
We've
you going?
been to America. We've been to New Zealand, Bali.
Yeah.
Where are you taking me next year for your team retreat?
Country Victoria.
Let's go. Thanks for shouting the gelato tonight.
I know that's your favourite.
It is. So, what's the good news from your team from last night?
We have award winners, 2 award-winning advisors,
Woo!
Amy and Kat.
Amy and Kat, they won industry awards last night. Risk Advisor of the Year for Australia and
Newcomer.
And Newcomer of the Year Australia. Actually, Stainsy and Sonia, they're clients of Sky. And Herbie and Kristen, you guys got to talk to these guys.
Future
Yeah.
clients is what I'm hearing. Yeah.
I know we need to increase your IP since your career change.
Announcing to the world we've got a pay rise.
Yeah.
Yeah. Okay, cool.
No, different occupation.
Oh, okay.
We'll cut that out in post. All right, so I told the others to scope out insurance. You've got the timer's gone. What are you doing? Just 2 seconds.
All right, so...
You paid the most, you get the least time. You know how it works.
So, yeah, I'm well aware. So I guess the case study is good. They're a young family and Tonight, I had a conversation with someone who has a close friend who is in this situation, and the dad passed away recently. So this stuff sounds like it's a cost. We don't want to be doing it, but life insurance is super important. Income protection is incredibly important, and we probably all know someone who is in a situation where they need insurance and personal insurance in place. So, but let's get down to the brass tacks. What would we be doing for these guys? I guess some of the things that we would be looking at is, full cover. They've got some cover already, a little bit. So, as good Sam's with ART, he would have just had an increase to his life and TPD last year because he just went from 34 to 35.
Oh, and they increase it.
Yeah, so they went from 125,000 to 240,000.
Still not enough.
Not enough, nowhere near enough. But the downside with ART
Be
is
gentle.
they pay
commercial partner.
They pay out their TPD on partial payments over 6 years, and this is the trend that's going to happen in the future. We think with disability insurance, it's going to move to instead of a lump sum once off, it'll pay out over 6 years is what ART does, and so that's one consideration. Aware is fixed cover. So Olivia's got $500,000 of life and disability. So it means that $500,000 as she gets older stays at $500,000. So Sam, when he hits 45, will go down to, I think, $130,000 of cover. So we can talk about the sums insured later and get in the nitty gritty.
Do you also want to do a profile that I can share?
Yes. Do I?
Yeah.
What are you talking about?
No, so the other guys are doing like a full-on detailed one, and we'll link it later.
Yes, for sure.
So you can spend
we'll
20
do that.
minutes getting into the weeds.
I'll geek out properly. Yeah, I'll get right in the weeds. But I guess high level, some of the things I wanted to touch on is the cost. So we did a cost comparison. What does it actually look like? So for Sam, it's going to be, we didn't have any health information, so that has a big impact when it comes to cost and consideration. But it's about $2,600 from superannuation per year to have full cover. We're talking, $1.7 million of life and disability, a heap of trauma cover, income protection at $10,000 a month, and $40 per month from his bank account. And Olivia, it's just $13,500. No, that's a lot of money. $1,350. See,
Jeez.
She gets a big discount now. Now we think $1,300 is cheap, don't we? And about $40 a month as well. So as a household, the super fund can fund a majority of the premiums, and $80 per month will come out of the bank account. So with a house, 2 young kids, insurance is super important. And in our deep dive, which we will do, I'll do a comparison between the insurance costs if we took out full cover with what we think is important with ART and Aware Super.
Okay, cool. All right. Well, thanks.
No worries. Thank you.
Give him a hand, everyone. Okay, we're going to take a break and we'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au. And they'll point you in the right direction.
Okay, so you two fellas, do you want to come up? Give him a hand, everyone. And then, Kat, do you want to pop up? Kat, Shelley, thank you so much. Shelley from the This Is Work podcast, thanks for coming. See you later. Come up, Kat.
Hello.
This is Kat from Baptist World Aid Australia.
Hi, everyone.
Hi. Do you want to
tell everyone about why we did the table?
So, in case you were kind of confused why Baptist World Aid was here and why we were running a gift swap, what we do for the most part is international aid and development around the world. And a small part of what we do is advocating for an ethical fashion system. We assess fashion companies on how fairly they're treating workers and the environment. And the more that we learn about the fashion industry, the more that we love secondhand and reducing our consumption, opting out of how the industry treats people and planet a bit more. So that's why we're running a gift swap here today. Many of you have dropped off your gifts, which is amazing. Please go back and do part 2 and find something that is new to you. You can take it for yourself as a gift or take it for a loved one. We love secondhand, but we don't run an op shop or anything, so I have nowhere to take this stuff, so please go and have a look. There's lots of finance books there, some candles, some bits and bobs. We also have our ethical fashion guides, so there you'll find the scores of over 450 brands, and so if you are heading to the shops this Chrissy, you can see who's doing better than others in terms of the work they're putting in behind the scenes.
Awesome. Great. Thank you so much. And for those who are listening, Kat and the team, we produced a podcast here called Behind the Barcode, all about ethical fashion. It's a 6-part series and it's fantastic. So make sure you check that out. So also, grab stuff. Everyone outside, grab stuff from the table, the gift table. All right, now I need 2 volunteers. Gina and Yolanda, I need you both to come up here if you want. If you want. Come on, Gina. You can be brave. Give her a hand, everyone. Now, what we're doing... All right, what's your name, sir?
Alec.
Alec and...
Toby.
Alec and Toby. And...
Gina.
Gina and...
Yolanda.
Vince... Can you grab this microphone? You don't have to be sensible. But has everyone heard that show, The Chaser? No. What's the one with the smart person?
No.
Oh, that might be it. So you're in teams, and I need someone to keep score. But I'll keep score. And if you don't... I could. Okay, you can. Ada? So this is a quick Q&A, because you guys listen to the Money podcast. Yeah. So these guys should know this stuff, all right? Just check your buzzers, team. And then, so what we're going to do, because Vince is also now, jump up on the stage for a sec, Vince is now going to, it launched today, host the This Is Investing podcast. So he's doing a weekly podcast.
Get infested.
But Vince, he knows a lot of stuff, don't you, Vince?
You mean I'm full of shit?
Yes, you got to use that microphone.
I've got to use the microphone.
Yes. If you guys don't know it, we go to the chaser, the smart person. If he doesn't know it, well...
Then we're all stuffed.
We're all stuffed, I think.
Is this like QI?
Yes. Okay, let's go.
Alan always comes
What
around.
is the name of Australia's compulsory retirement savings system? Superannuation. Correct. Grab a mic each.
Oh my God.
One of you hold it. You got to speak into the mic.
Because it's Australian and it's super.
Thanks, Vince. These are in no particular order. On the ASX, what does ETF stand for? Yolanda, speaking to the mic.
Exchange Traded Fund.
Exchange Traded Fund, correct. VAS is an ETF that tracks which Australian index?
ASX 200.
That's incorrect. Chaser.
It's the ASX 300.
The ASX 300.
Close, but no cigar.
What is the main tech index stock in the United States?
NASDAQ.
Is there a second part? That made up of 100 companies.
NASDAQ 100.
Yes. In property, what does LVR stand for? Yolanda. Loan to value ratio is correct. What is the Medicare levy percentage for most Australians?
2%.
Yep. Bitcoin has a maximum supply cap. How many coins can ever exist?
21 million.
Yep. Alec is crushing it. In the US stock market, which company is often referred to as the world's largest retailer by revenue?
Amazon?
No. Chaser?
Walmart?
Yes! This guy's nuts.
And none of it comes from my wallet, I can tell
No,
you.
that's right. What do we call income paid by a company to its shareholders?
Dividends?
Correct. Which Australian bank is nicknamed the Big Four's younger sibling?
Macquarie?
Yes, Macquarie. The term for money you owe on your credit card that carries over to the next month is what?
The balance?
Yes. I think it's tied. No, I think they're winning. Sorry. If a home loan... Okay. I don't... Vince will probably get this. Just... If a home loan interest rate is 5% and you owe... Oh, no, it's actually not that hard. Owe 600,000, roughly how much interest is charged in the first year? Alec?
Be 20,000.
No. No. 5%. There was a pressure buzzer.
30,000?
Yes.
Yes.
Gina also, if you order a book from us or any merch, her company, Shift Logistics, dispatch it. And what do they call it? What's the word? Fulfill. Yeah, fulfillment. Yep. Which US Thanks, Gina. Love your work. Which US company... Jeez, it's a dying crowd, isn't it? We're making content for YouTube, people. It's what it's like
It's
behind
not
the
exactly
scenes.
Mr. Beast, is it?
It's not Mr. Beast, no. We got some Irish...
Where's the $5 million?
Yeah, we got some Irish guy crapping on. What is a US company that became the first to reach a $3 trillion value?
Nvidia.
No.
Tesla?
No, not Tesla.
Apple.
Yes, the Chaser crushes it.
Sorry, no, I changed mine.
Okay, this is a curly one. What's the name of the ASX listed company that owns Bunnings?
West Farmers.
Yes. What do we call the process of spreading money across different investments to reduce risk?
Diversification.
Diversification is correct. What is Australia's official cash rate set by? Or who sets? Yes.
Reserve Bank?
The RBA, yes. I would have taken the RBA, Reserve Bank of Australia, its full name, or the Reserve Bank, as Yolanda said. A bonus point, what is the official cash rate at the moment? I'll go to the Chaser.
3.25?
It's 3.6.
6.
Yeah.
Did they sneak it increasing when I wasn't looking?
I think so. To be fair, this could be another typo. All right, we've got 4 questions to go, and then
studio
it's
Glen's rules.
more. My studio's my rules. The S&P 500 contains how many companies? All right, that was both the same.
500.
Chaser, do you want to elaborate on that?
Yes. The index does in fact contain 500, but they're not actually the 500 largest companies. But most S&P 500 index funds don't hold 500. They're usually somewhere between 498 and 503.
Yes, but the index, the S&P 500 on paper has 500 companies, so we all get a point.
Everyone gets a point.
Yeah, and the Chaser just got to elaborate. In personal finance slang, what is a rainy day fund called? I actually read the question wrong. What is a rainy day fund?
Do you want a description? It's like,
I'll take money set aside for unexpected expenses. You get a point, Yolanda.
Goal, Yolanda.
What is the annual tax-free threshold in Australia at the moment?
18,200.
They'll do it.
Yep.
Giddy up. Last question. In investing, what does the term bear market mean? Was that you guys first? Oh, the
No.
ladies? Go.
it means it's in a downturn?
It means it's in a downturn.
Sort of?
Sort of. Sure. I'll give you a bonus point for trying, fellas.
2 consecutive months of negative returns.
Sounds a bit more like a recession to me. But they're close.
Yeah. What is it, Vince?
It is a Decline of 5%.
It's 20% from recent highs. So there you go. It is Friday night.
I was talking about a bear cub.
Oh, okay. Yeah. Anyway, everyone give these peeps a hand. Thank you so much. These 4 people, I met 3 of them tonight for the first time, so thanks for coming out and supporting the podcast and all that we do. And thank you to the Chaser, Life Sherpa. Sure. We're going to wrap it up. So just a couple of, before we go and finish the formalities, I just want to say some thank yous. And I also, when we press stop, I'm just going to record a quick 5-minute Christmas Day podcast because I think it's really important because there could be some people that feel lonely on Christmas Day. And as a podcaster, I always do a dedicated episode on Christmas Day, even if it's 5 or 10 minutes. And then the kids are going to come and tell some jokes. Just check with your parents that you're allowed on YouTube. Okay, I'd like to thank my whole team for everything they do. Jess Knaus, Rach Chow, Sean Ciccardo, Josh Fernandez and Ryan McGrath. So everyone give their team a hand. Did John go? John, come up here.
Oh, we're still on.
We're still on. Yeah, this is the end. No one's listening to this. Just the true believers like us, Johnson.
This is what happens in the real world, right? When actually, how many are still listening towards the end?
Yeah,
it bugger all.
peters out. But the ads still get served and we still get paid. Yeah. So I'd like to thank our show host, John Pigeon, Rach Kroon for this year. Thank you to Emily Wallace, who stepped aside from This Is Property. I think she did 4 years with you.
That'll do.
Yep.
Yeah.
Are you driving tonight, sir?
Yeah. No,
this is John Sober.
She was good.
She was good. Thanks for 4 years.
It's ruthless, this business.
Shelley Johnson, Jess Brady and Dev Raga, who couldn't make it tonight. Vince Scully, thanks, Vince. Looking forward to more This Is Investing podcast episodes. Martin McGrath from Financial Edge Group. Thank you. Nathan Fradley, thanks for helping us with Retire Right. The Retire Right podcast is one I can't really do the technical stuff for. I can have the wishy-washy feel-good chats with anyone, but I need smart people for that. And Vince, thanks for helping on that as well. Kayla Miles and Adrian Smith, This Is Business Crew. Thank you so much for trying to get that off the ground. And really thank you to the listeners who listen every week, because without you, it's an ecosystem, right? We've got people we listen, we've got the wonderful companies that support us.
Ego or eco?
Ecosystem. Oh. Yeah. Get that out of your head, son. Your ego's too big for this.
How good was that dessert pizza?
The dessert pizza was good. Thank you to the pizza. If you're in Newcastle and you want a wood-fired pizza truck, what's the name of the business? Edna. Yeah, Etna. And Spoon Bay Gelato. They were fantastic. Thank you to all the tradespeople who really helped with the studio fit out. Basically, a month ago when we... Thanks, Ada. James Millard, control your spawn. And get a joke ready, Ada, all right? Get a joke ready. I think when I got back from Europe, it was renovating upstairs. It literally killed me. Then I found out it was medication making me fatigued. Anyway, it's this building has been the death of me. So yeah, had to change medication, and I'm still sore and can't walk.
Get off the gummies.
Yeah, get off the gummies. I thank you to Ken and Dirty Mike for helping me paint upstairs. Don't look too close, because it's horrendous. Hey, it was not that good. Painting's hard, guys. But actually, I wanted to have a real special thank you to Mum and Dad for coming down from Brisbane. Thank you, Mum and Dad, Wendy and Des. Gail and Daryl, Lauren, James, and the Twinnies. Thanks for coming down. Thank you, everyone, to come afar. But a very special thank you I sent a text message to somebody last night. Oh, I just got your message. I've got to get the kids home. Thanks for the hospitality. Come on. Get out of here. When was that sent? 20 minutes ago?
No, like 20 past 8.
Yeah, all right. So this person, I sent a text message last night with the crying emoticons. I'm like, thanks so much for all your help. And then the cry face. And he wrote back, anything for family, I've enjoyed every bit. Now, this person has spent countless hours here and really helped with everything from all the security data, the tech. We were hanging light boxes. He hung the shelf above the fridge. And so Jason Daniel and Neil and Shelby from North Lakes Telephones. So Jason said anything for family, but I would say don't call me family, call me friend. And I think you really get to choose friends. So thank you so much. And I just wanted to give both of you a little 2 nights away in the Hunter Valley. And there's a restaurant up there called The Covenant, and it's really nice. And you can get an Airbnb, or there's a B&B on site. Oh, sorry. And I think I wrote in the thank you card, Shelby, take him away so he stops working. So the guy came up here last night while we were setting up, and everyone go and have a look at the data rack behind the curtain. He's all the colour codes, because if someone saw his work, there's red for security, white for access, blue for impeccable service. And thank you so much, Jason. And Neil here, I did my apprenticeship under Neil when I left school. So a lot of the stuff that I know today still came from there. So thank you so much.
I can verify their work, actually. Well, on good recommendation, these guys installed a high-tech security system in our house. And my good son over there was playing rugby league with his cousin last Sunday in the backyard and absolutely cleaned up his cousin and is like, nah, didn't do it. Okay, let's go to third umpire. We've zoomed in on it and the shoulder made contact with the chin, don't worry. So thank you, Jason, to your... solved a problem out the back.
Yeah. So thank you so much, Jason. Take him away, Shelby. Give him a couple of nights. He doesn't eat anything but steak. So there's a really good steak at the convent. Thank you so much for coming out tonight. We'll press stop on this recording. And then kids, do you want to come down? We're going to do our bonus jokes. Have you asked your parents for permission? Okay. Thanks so much. We'll see you soon. Bye.
Bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.
So we're going to officially, but before we do it, there we go. Everyone has been asking on the mugs, or the gelato things, there's thanks to Sky Wealth, and I'll tell you about some sponsors later, for supporting the gelato and the podcast. Phil Thompson, thank you.
Yeah,
Phil, if you just paid a little bit more, you would have got some scissors. And everybody was wondering what this logo is. So this is the logo of the studio. Now, if you go onto my personal Instagram, there is actually, when I went to London, I went to a town called Thaden Boyce, and that's where the James name that we could trace back the furthest. I feel sorry for mum's side of the family. We don't know where the beer name come from, but I'm a James, so there's that. Alcohol, there you go. And in the town, there was this crest with like a deer on it, and there's different colours that represent all our different shows. So I wanted to call this building something different because we now hire it out to other different people. So the name of the studio, if you guys want to turn those banners around, drum roll. So we've got Thaden Ridge Studio. So I use the name Thaden because of England, and so this is now Thaden Ridge Studio, and so we will officially, if everyone wants to come forward and grab a bit of. Shelley, do you want to cut as well? You can. Shelley and Ray, anyone can come. I told my sister to buy like 8 pairs of scissors. We don't have a spare pair of scissors, but you can. She's got a verve. And then everyone grab a bit of ribbon. And then on 3, I'm just opening it. You're the stars here. Give you a little ribbon. 1, 2, 3. Go. Cut it, guys. Cut a bit of ribbon. Yeah. So there we go. So the studio has now been opened. I'll get you guys to put them up the back somewhere. You can keep the scissors if you want. I love gelato.
I'm just glad our heads are on there because
yeah,
it would have been awkward if one of ours was missing, wouldn't it?
That's right. Yeah. Don't. And then so over here, just as a thank you for tonight, I really want to thank Sphere Home Loans, Life Sherpa, so Vince and Rach, thank you. Vince's new logo that isn't released till February, but I used it anyway because I don't care. Sufficient Funds, James Millard, thanks so much for chipping in tonight. Jimbo, you paid for the pizza or something. Tallerwood Wealth Advice, Scott from Everest Wealth. Thank you, Scott, for paying for the something you helped tonight. We'll get to you, Phil. Don't worry about that. Oh, the beer. Yeah, he paid for the beer. Jimbo, I think we're just in profit now with Jimbo. So Tallerwood Wealth Advice, that's a business that I'm running with Scott and Alex from Everest Wealth to help people over 50, 55 do pre-retirement planning. Envisage Property, you might have heard of them. Thanks for your support, Johnson.
Always.
John called me this morning because we're re-signing John's contract for another 5 years because we're official now. It's like the hottest day in the world. And he wants to talk commercial terms. And I'm like halfway up a ladder setting up. But I acted cool.
Well, you're the type of guy that would have told me if you didn't want to talk.
It's true. But I wanted to lock that down while we were agreeing.
Before tonight.
Everest Wealth, thanks for coming over from Perth, Scott. Finex, they're also mortgage brokers in Perth. Solvair Wealth, Johnny's other business, he's collecting them. Financial Edge Group, Martin McGrath. Marty's out here. Thanks, Marty. We're taking Retire Right on the road next year. We're going to do Retire Right seminars. The best part is I can hire RSLs for those ones.
Cheap.
It's going to be awesome. Atlas Wealth Group, they help all our listeners who are expats. And if you have a look on the table in there, I think they sent me that big thing. I reckon that's $1,000 hamper.
Amazing.
Like huge.
Cheap.
And Next Move Home Loans, Tim Kelly. They were driving down tonight, but the fires stopped them at Bulahdelah.
Ah.
And he was upset because he was like, I had a pasta maker for the gift table. So yeah, thanks to all these businesses. And Nathan Fradley, to be honest, forgot to put your logo on there. And you didn't pay for anything either. No, I'm joking. No, you're a good guy. Thank you for coming up from Melbourne. Nathan and I and his wife went to Toole in Adelaide last Friday night. And the week before, I was in Perth with these guys, so we're just doing... Yeah.
Haven't been briefed on this, have I?
No, you don't need to be briefed. Nothing changes, does it?
Might need a Corona.
At a live event in Melbourne once, I called John up to the stage. He was about 12 beers in. He didn't know he was going to be talking. So we will have a break probably in 20 minutes, so if you need to leave or eat more food. I've asked the gelato people if she can stay longer because there was plenty of gelato and I love it.
I brought my son Max along too. Just welcome Max here.
Hey, Maxie. Thanks for coming.
He didn't want to be recognised, but so he'll thank me later. And Molly was the one that didn't want to be, that wanted to be recognised, and I've avoided her. So, yeah.